So a huge 130 points taken on GBP Japanese yen. This is the trade recap of the week. We hope you enjoyed. Don't forget to like, comment and subscribe for your chance of winning the $25. We're going to announce the winner of the previous $25 winner at the end of this video as well. So stick around. Let's get into the video. There's so much more mileage on GJ, so make sure you pay attention. You can see what we've already banked and how we've traded it, and you can see our projections going forward as well. Let's get straight into it. So welcome to this video. GBP Japanese yen is the pair of the week, the kind of trade recap. We've been covering this in our free group. You know, you guys can get access to this. Check the description below, and there's going to be links to all sorts. Okay, so you know you can follow along with these moves. GJ, it's been waiting, it's been brewing, and you can see that by the daily candles here rejecting this kind of top end price 188. 188 actually is just a little bit lower, but you know we were previously trading from this 188 and then we traded slightly higher. Therefore we must drag the box across, you know, use the new zones, because that's what's happened during the latest trades, you know, on the daily time frame that we can use, and that's what we've done. And you can see it just rejecting and holding nicely. Now we thought we were going to tank here, and we didn't, and then you know on the Friday we corrected, and that was the entry point for those that were looking to take this. Now last week, this is something we were looking at on the Tuesday. So Tuesday last week, you know, it was this candle here. We were in a call with Kane and Owen, and we were discussing this. We were talking about this trading setup, and we were thinking like, you know, set and forget approach. If you're entering on the Tuesday like so, stops at above, and you know, when you start to break this wick consolidation, that's when you should move your stop loss to entry price. And we didn't really break it. You know, we were just kind of wicking down, wicking down, wicking down. You could argue on the Wednesday candle, this would have been the break. But again, you know, we had traded below this. So ideally, you know, when you're pushing 2R, I'd say would be the safe point to obviously trial your stops and move your stop loss to entry price. Now, you know, this has finally started to break. Yesterday's candle kind of engulfed from that resistance price. This possibly would have been the retest price, the you know, the additional entry. If we start looking at slightly lower time frames here, we can kind of suss out a little bit more information. Now you can see the evident exhaustion around a key level, right? So we've got 188, we've got daily supply, daily resistance, lower time frame exhaustion, and now we're seeing the lower time frame structure break, right? Here's the 8 hour, and this is what we marked on yesterday in the Telegram group. The slight lower time frame break and retest play, and then over the Eastern, as we mentioned, again, this is a base GBP and quote yen pair. Now, during the Eastern session, this is certainly a pair that can move. So it moves during the London session and it moves during the Eastern session. It moves a lot during the day. Okay, during the 24-hour period, it can move a lot. Now, you can see how aggressive some of these candles can be. Now, this candle alone, you know, we're talking 120, 130 points in a 4-hour period. So half a session, a big, big move. And we've got a big void to fill. So, you know, we're looking to initially come down to 186,300. We've taken trades on this. We've scaled out from, I think we got in at pretty much bang on the nose here. Well, we actually got in yesterday. And we had stops at about 400. Can't remember where it was now. So Friday, Jan, so we're on the 4-hour, excuse me. Monday, it's Tuesday today. So we got in around here. And we had stops just above this period here. So we had 40-point stops. And I believe, yes, this is the setup we had. So we popped higher, we consolidated. And as we started to break, we even got an entry on this retest, I believe. And then we started to take off. We broke the lower time frame structure, pulled back, and that's when we managed to get in. And the basis was, you know, even if we came down to this zone here, we'd still be meeting a 2R trade. Now, we ended up breaking that. It was great, and we followed along, retest, and continued downside. And now all we can really do is just follow this lower time frame trend. You know, we can just follow this lower low, lower high sequence until we exhaust. And then we can imagine maybe a bigger correction would happen when we hit one of these end zones like so. A larger zone, a daily zone, and then we could see some play like this, right? Now, until obviously that happens, then, you know, we can expect hopefully more continuation of, you know, what we've seen. There's lower time frame stuff, lower time frame trends. It's all very good. And we can just kind of rinse and repeat. Now, you know, the scope on this trade is massive, like we said. And again, just kind of running through the confluences. What can we see here? Like, you know, we're looking at it. We've got evident daily supply. We've got resistance price. We've got this 188 whole number. There's a lot going on, but we always have to think, and the basis of our strategy is trading between the zones. Now, unless there's a catalyst, something that's going to move the markets on a, you know, macroeconomic front, you know, interest rates or something to do with inflation or risk events, you know, anything to do with Brexit, UK, you know, Prime Minister changing and, you know, governments changing in bits and pieces. These are kind of economic events and risk events that are going to move markets. And, you know, looking at GBP Japanese yen, you know, we haven't actually traded this high since January 23, and going back years and years and years. We've done this exercise with Owen and Kane. So, you know, almost 10 years we haven't traded as high as this price. So why would it burst now? Why would it break now? And this is why it's leading me to think, you know, what we could actually see now is a full range fill. And that would look something like this. You know, based on the entry that we got, we're out now, we've closed that, but, you know, we've gone quite aggressive on that. We've been paid for it and we're happy. Now we've got profit to play with in the case of grabbing extra entries and, you know, retesting and so on and so forth. But like I say, you know, this is the range, you know, middle of June. So, you know, just the start of summer. We're kind of coming in, we're ranging, we're finding this support, and the range is absolutely huge. So if you haven't already taken this trade, we covered it on Instagram, we covered it on you know, all our socials, Telegram, Discord, etc., and also YouTube on one of our watch list videos actually. So, you know, check it out, and there's still opportunity to get involved in this. You just have to get a lower time frame entry. We scaled in, you can also scale in. This trade was taken on our Me Funder account. Check it out around this screen somewhere. You know, you can see exactly what they do, what they offer, and how they can help you kind of trade bigger lots and larger capital and stuff, right? So really, really good. That is the trade recap of the week. Like I say, it's an absolute textbook trade. So yeah, more of these. And this is, you know, what we've covered in one-to-one coaching call. So it's a really, really good example to share with you guys. If you like the video, don't forget to like, subscribe, comment, and we are quickly going to do the winner. So yes, almost forgot. This is the winner for the $25 giveaway from the previous comment. So again, thanks for commenting. And we are going to go with regular visitor here. So well done. Please message you won the $25. And yes, don't forget to like, comment, subscribe on this one. And we'll do another one for you guys next.